Good trading day today, plus $675. Not a lot, but we took what the market gave us, which wasn't a lot. Like I said, the hypotheticals were minus 2380. We wanted to sync up with the drawdown, so we waited for about a minus 3K drawdown and got in right at 3K, which was right about the turning point of the day. It didn't go much more. It didn't go much lower than minus 3K. We'll look at the money management algorithm indicators. So you can see that, and plus 675 on the day, up on the week, up on the month, quarter, and year. Tomorrow is the last trading day of the month. One trading day left in the month, and then 2 trading days left in the week. And Friday is the first trading day of September. And tomorrow is PCE, which is an inflation indicator, and Friday is the jobs report. And so we're going into a holiday weekend. Historically, seasonally, it's strong going into the Labor Day weekend, and then September is the weakest month of the year. Historically, I'm not sure how much seasonals matter in the new world that we live in since COVID, and so I'm not so sure about that. But it does, these going into these 3-day weekends, the light volume tends to go higher. And so, speaking of light volume, it's kind of an interesting concept. The idea that the machines are in control, but vacation, August is light because of vacation, but if the machines are in control, the machines don't have to go on vacation. So obviously, humans still have quite a bit to do with the markets, and the machines are not, completely in control. There's a lot of oversight. I'm talking about the institutional level machines and market making machines, and so still a lot of human oversight in that, or we would not have light volume just because humans were on vacation. So let's look at the market and the trades on the day. So here's the NASDAQ, and market continues to days like today where the posture's higher, like we're going to go up, and it comes all the way down and takes out the low. Some people call that the gotcha trade, and it's very prevalent lately. Longer term, it's not a great back test, but lately this kind of pattern is working pretty well, and you're constantly seeing this sell off, nope, coming back, sell off, nope, come back, sell off, nope, come back. And so it's a strong tape, really. Low VIX is low, volatility is low, and all these head fakes down tend to resolve higher until something big changes. So it could go down at any time. Ought to go down, in my opinion, more, but the liquidity is still there to buy it and drive it up. So I anticipate higher prices because of that and the seasonality of Labor Day. So we had a big strong day yesterday, kind of sideways today, continuation maybe tomorrow and Friday, or we could just chop into the holiday. I don't know. I don't anticipate a sell-off. That could happen too. We are flat at the end of the day and ready to take long or short trades. That's why we have long and short algos, trading systems. And so let's look at the trades on the day. Before we do, revisiting yesterday, we had a lot of data issues. Those have been resolved today. Every now and then you get those two things on your screen. One is waiting for data, and the other one has to do with, you see the word corporate actions, data server. You see those a lot on the weekends, and those are typically, I think there's maintenance that's related to that. You don't typically see them during the week. We were seeing them during the week yesterday. It's very rare that you see them during the week, and we saw those yesterday. Seems to be running fine on my end now. Also cleared out the cache, but I think it was something on TradeStation's side, and also had order rejects yesterday. I forgot to mention there were some order rejects. I talked to TradeStation, and TradeStation said that they were disconnected from the exchange. There was a brief disconnection from the exchange. I had some limit orders above the market that were profit targets, and those were all canceled. And since those were this was before the data outage. So that this happened, had the order rejects, and then we had the data outages yesterday. The order rejects were a disconnection from the exchange. It was brief, back online. The data outages lasted throughout the rest of the day. They are working now, so that is the status on that. We wanted to wait for a 3K drawdown to start today, and we did. We missed the beginning trades on the NASDAQ. We took Robot. It was down 400. Lots of this robot pattern hasn't been working well lately. Buying at the open is getting slammed a lot lately. The EVP1 trade immediately lost 2. We didn't take these trades. We were waiting for this drawdown. Minus 1,000 on minus 1,000, and then minus 700. With slippage and commission is about minus 1,025 and minus 725, so minus 1,750. And then we went over here and we were looking at these short trades on opening chop. These were, the ES was short and it was against us, so we phased in. We got short right up here, took the robot trade, it was down, and then we waited for an additional $3,000 worth of trades to go against us. And so between opening chop and opening chop 2, this was a net loss, hypothetically, of about $1,300. So we shorted 2 units up here, short right near the high, 45.28. So we got short, and then it worked out really well. And so got in right at the turning point and shorted it. And then these opening chops did really well today. Went short, then long, up on the day on 1,600, and then short, and then long, and then another short trade that was a loser, but up 1237.50. Tick count trend dynamic turnaround was minus 137.50. Tick pulse minus 625. You see these day trade shorts or day trade longs getting punished even in an up market. So there's this stealth bull that doesn't want 0 day trade options or day trade longs to get too carried away, even though that worked really well yesterday. You continue to see this pattern come in that wants to slam the open bid. And so those are the S&P strategies. Opening chop was we were 2 for 4 and up about 2K on the S&P strategies. NASDAQ strategies really struggled though, and were down about 4,400 on the day, 1 for 8 on the NASDAQ. And so fortunately we missed the bulk of the trade that was against us and captured the opening chop, the best of the opening chop on the S&P. Viper minus 55, gap continuation minus 725, robot minus 425, and then we had minus 955 on EVP1 because it came back and had a trade at the end of the day that was slightly profitable. Same with EVP1 long only, it was minus 655. This tick pulse was minus 625. Tick count trend reversal was minus 2190. And then tick long aggressive had a nice long trade that captured this reversal move for plus 1175 on the day. 1 winner, 1 small loser. And so, like I said, the S&P was 2 for 4, about plus 2K. And the NASDAQ was 1 for 8, about minus 4.4K on the day. Let's look at the micros. Going in and checking out the S&P micros, it is minus 62.50. We had plus 160 on opening chop. We had plus 123.75 on opening chop 2. Tick count trend dynamic turnaround was minus 1375. So the same trades, 2 for 4 in the micro S&P, micro NASDAQ, minus 450 on Viper. Gap continuation was minus 73, minus 4250 on robot. EVP1 was minus 97. That's the EVP1 was minus 97. EVP1 long only was minus 67. Tick pulse was minus 62.50. Tick reversal minus 218.50. So that was the dog of the day. And tick long, this one was a little different. This trade was different. It didn't take 2 trades, and where one was a winner and one was a loser. It just took 1, and the result here was 107.50. So 107.50, and that would compare only about a $10 difference per micro than what the NASDAQ strategy, E-mini NASDAQ strategy showed based on 2 trades. It was 11.75, and 1/10 of that is 117.50, and this is 107.50. So the NASDAQ strategy had a long trade here, and then a long trade here that was a small loser. So Overall, a fairly slow day. Look at the money management algorithm indicator, and you can see here minus, well, it did go down to minus 46.70 at this point, and just down the whole day. It was never really up, but kind of a slow day, not many trades. Flat for a long time on the NASDAQ here, flat for a long time here. Very end of the day got long for, and so captured a little move at the end of the day on long for NASDAQs. And the S&P, same thing. Short two, short two, short one, short two, long two, short one, and then short one. Kind of a slow day, not a lot of trades. I've updated the money management algorithms, the portfolio money management algorithms for the micros to compare results. The E-minis do signal better, but there's some good results here. Really good considering 68K. This is hypothetical. This is not live. This is new research with a $2,600 drawdown using 250 per round turn slippage and commission. And here's the performance graph. And trading no more than 5 micros. And so it requires less capital because you're only trading 5 micros at most, and just the micro NASDAQ on this setup. And so let's look at the signal strength trader for the S&P. This is just trading 1 micro. Low drawdown, 68.2750 over the last 3 years. I mean, it's not a lot of dollar profit, but you're trading 1 micro ES. And so that's pretty good. Here is the equity curve, and you can scale this accordingly based on your drawdown and your if you want to be aggressive on something like this, you could. You could add up your drawdown plus your I guess you could say, well, your margin. So your margin for the micros, and so every 1K of profit you could add a contract potentially and try to compound it. But that's aggressive. If you do hit a worst case drawdown, which we often do, it throws that calculation off. So you have to give it some room or start new contracts when you're up by 1K after a drawdown. So for example, if you're gonna trade one contract every 25K and you start with 25K, and this is for the stock index 34, this is a more aggressive. What I was talking about here is more aggressive than the stock index 34. It's adding every 1K of profit. We're adding to the stock index portfolio 34, which trades 34 strategy, every 25K of profit. And you got up here, you broke out and you hit 50K. You don't want to add one contract then. You want to come up here and wait until after a drawdown. You draw down to 50K. And your drawdown amount gives you in at a good entry, at a good price, at a good drawdown alert level. So maybe you're up here at 27K, or no, you're up here at 52K, and you have a 2K drawdown, and you're at 50K. Then you add 2 contracts. And so same thing here. If you start with 2K, for example, I don't recommend trading with 2K, but this is just a mathematical example. And you come up here, and you're up here at 4K, and then you pull back to 3K. Maybe you consider just experimentally, be interesting to see the maximal compounding rate if you never had a worst case drawdown, what you can potentially do. It's very aggressive, like I say, not recommending it. Just showing you the concept that you add contracts not as you break out through drawdowns, not as you break out to new levels of capital, but as you pull back into them, as you pull back into that level, and you're still above that amount, then that's a better time to add contracts. So wanted to go over that. So just as a reminder, yesterday we got out of sync, and the hypotheticals were actually need to adjust this to minus 2380. So hypotheticals are at minus 2380 drawdown, and yesterday the hypotheticals were at an equity peak and we were in a drawdown because of our data issues. So we wanted to wait for a 3K drawdown to start. That's what we did today. That's why we're about 3K better than the hypotheticals. So we are 2200 away approximately from last Thursday's equity peak, and so Thursdays have been surprisingly good, and so looking at potentially a nice trendy Thursday one way or the other, or favorable choppy price action, we'll settle for that as well. And last trading day of the month tomorrow, August 31st, and looking forward to that, and Friday's trade as well.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.